How's it going, everybody? This is BeatTheBush. Today I'm going to talk about when you should cash in on stock options or RSUs. Stock options and RSUs are something that you get as part of your compensation plan. Usually if you work for a startup, you would get some stock options as an incentive to work harder to try to bring the company public to make the stock price worth something. Alternatively, unicorn companies such as Facebook, Snapchat, or Uber might give something in the form of RSUs, which is basically shares of stock that you get outright for free. You do not have to pay for it. You do not have to exercise it at a certain price. You just get the stock itself and it's yours to keep, or you can sell it at the full value. Now, I'm not going to talk too deeply about the tax implications of short-term versus long-term sales. I'm going to talk more about how you should take it in terms of an investor. As an investor, you have to ask yourself, if you do not work for that particular company, would you go on the open market and actually buy those shares yourself and keep it in your portfolio? Oftentimes when you work for a company, you might have an emotional attachment, and this might bias your view on how much the stock is worth. It is true that some people might do very well because they just take all the stock options or the RSUs and they just never sell for many years, and at the end they sell it all and they make millions or something. This is essentially the same thing as you taking your cash and buying stock in that company over the many years and then letting it grow. It just so happens that the company that you work for had the stock price increase, and therefore you had a large increase in whatever you put in. When your stock option vests or the RSU vests, is as if you took your own cash and bought more and more shares of it. So you really need to look at how much that you're holding in the company, if that fits well with what you want in your portfolio. As I said in previous videos, whenever you invest in a particular single company is actually a very risky thing to do. Normally for me to invest in a particular company, I would look at a really large number of companies actually, and I would follow the stock information on its news, read all the information I can, try to value the company itself. And when you're actually part of the company and you know projects that you're working on, you are inherently going to be biased, and somehow whatever you know, since you're living in it from day to day, it's going to bias you. Maybe something wrong is happening in your team or something, then you go, oh yeah, the whole company is doing bad, but little do you know, it's just that particular team is doing bad, and therefore it will cause you to sell. So when you hold stock in the whole company, you really need to evaluate the company as a whole. And this is very hard to do if you have stock options or RSUs in the company that you're working at. Now, generally what I would do is sell the stock as they vest. This is nothing personal with the company at all. It is more for diversification. And if you look at CEO pay, they often get a lot of stock options or restricted stock options vested. And what they do is they sell this immediately and they take the cash and run with it. So it's more of a diversification type, because it's a very rare instance for me to go and buy thousands of dollars of a single company. As I said, even if you're going to invest in a single particular company, you really should restrict the amount that you invest to less than 10% per company. This is just a diversification thing because you don't want all your eggs in one basket. For most people, and myself included, I do not think I'm a very good stock picker, although I've had previous investment videos where I've selected one particular stock that I was very sure of out of a lot of research, and I recommended it, such as the IXC oil index fund. That happened to do well, but if I repeat it a couple of times more, I might not be able to find stock just as good. So my final recommendations for stock options or RSUs is generally to sell them as they come in order to reduce your exposure for one single company. Now, some people, it's gonna go in the comments and say, oh, so-and-so, they held everything and then they ended up making millions. Yes, that is true. The idea here is when you hold a single company or a few companies, the volatility is gonna be really great. Yes, there will be a lot of gains possible, but there's also a lot of losses that's also possible. The way I'm describing things is really just as a prudent way. Yes, you're not going to get as much gain. However, you're also not going to get as much losses. It's just the way I would normally invest. So give that a thought when you're holding stock options or RSUs. You're holding cash value here. There's a value inherent to it, and this is actually bought by your own cash. Don't think of it as shares just floating around, because you can sell it immediately and get a bundle of cash for it. So this is the same thing as you taking that bundle of cash and going out there and just buying some company. In this case, is the company that you work at. Don't forget to give me a like on this video, comment down below. Let me know if you are the type that sells your stock options or RSUs immediately in order to reduce your exposure. If you're interested in supporting this channel, don't forget to check out my Audible link down in the video description below where you can get a free audiobook, and if you don't like it, you can cancel it before the subscription expires. You can still keep the audiobook and you can still help benefit this channel. If you're interested in supporting my channel directly, I also have a Patreon link over here where I give various perks at various contribution levels. And as always, don't forget to subscribe to my channel over here and click that bell icon next to that subscribe button so that you get a notification whenever I upload a brand new video. Thanks for watching.